We had a fairly mixed day in the S&P 500 yesterday, yet when we zoom into the tech sector, one of the worst performing across the market was Palantir, down nearly 7%, and as the market has just opened, we can see it down between 1 to 2%, so we want to understand, has the bubble finally popped for this company? When we take a look, it is trading on a forward P around 162, and all three analysts, not something we see very often, give this company a hold. So we're going to take a look, bear in mind down overall over the last few days at 4.5%, and understand what is going wrong, whether or not actually we should take the opportunity to buy the dip. And the first thing is to understand where this growth has been coming from. Now, just this month, in fact, they surged around 20% when they released their earnings, and we can see they have increased their full year guidance for their top line well above analyst expectations. And remember, it was just in September where they did get that entry into the S&P 500. In terms of the actual numbers, well, 10 cents above the 9 market was wanting, and in terms of the top line, again, looking very good in terms of that growth, 726 versus the 701. And it's up 30% year over year. So when we look at the same quarter in 2023, their top line is up significantly. And Karp, the CEO, has said the growth of their business is accelerating and ultimately exceeding expectations, as what he believed is unwavering demand for the most advanced AI technologies, not just from the US government, but in fact also their commercial customers. No surprises, the share price has reflected that growth, but is it a little bit of an overreaction the other way? In terms of the next quarter, they have extended what they are looking for, 767 to 771. Previously, the market were anticipating growth of 741, so that is very good to note for shareholders, investors, and the market overall, especially those who have exposure to the overall S&P 500. And we can also note they've bumped up their revenue range for all of 2024. Now, we'll look at their latest investor presentation as well, but that isn't the only reason why the share price did increase. Just a few days ago, they did announce that they are moving to the Nasdaq, something we will touch upon shortly as well, as there's been some very interesting news in relation to this. So ultimately, they will be trading on the Nasdaq with the same symbol, PLTR, on November the 26th, so around 1 week today. We also have news here that there are some dangers, no surprise, of companies like Palantir who have been increasing at such a rapid rate. Now, we'll just show you, for those that aren't aware, it is up around 187% over the last year. And as we can see, it is down around 10% from the all-time high at $66 on around a 10% pullback. As we noted, a triple hold. Forward P looking very, very high. We did get an article yesterday which said, why is Palantir stock price crashing? Now, some people will argue that a 7% is just a pullback and not a crash. Nonetheless, what we can see when we take a look at some of the reasons why, first one is when you look at the momentum that we've already discussed, this company has been increasing at such a rapid rate that the forward valuation is starting to look very, very interesting. First things to discuss is a post that was deleted. Now, for those that want to see what it says, this is from a board member in Palantir. We are moving at Palantir Tech, so the handle for Palantir, to Nasdaq because it will force billions in ETF buying and deliver tendies to our retail investors. Player haters, be aware that we've been hated for decades, plural. Everything we do is to reward and support our retail diamond hands following. So, very interesting, not something you would expect from a board member to come out, and no surprises. We can see here it raises questions about the company's governance, their priorities, especially at a time where people are believing this company now is severely overvalued. I think it's fair enough to say their corporate image is definitely one that would be under question, not something you really want to see from a board member to tweet, so no surprises whatsoever, in fact, that he has not just deleted this post, but also his account. Now, we can just very briefly here touch upon their valuation, although we will show you our own valuation model, the process, and what number we get to. But in essence, there is a tweet here that it does highlight that it has a market cap of just under 150 billion and earnings of around 476 million per year, and therefore it talks about a potential significant crash over the subsequent few months, even the next few years. So definitely some concerns here that have been raised, which you could argue are valid. And as we said, the forward PE does look very, very high, and right now it is down around 10% from the 52-week high that we've seen not long ago. Now, in terms of their earnings, we do note over the next 4 quarters, Palantir are anticipating double-digit every single quarter on a year-on-year basis, and out of the last 4, they have at a bare minimum been in line, whereas we can see the 2 more recent quarters they actually outperformed, and ultimately that is a 100% historical forecasting accuracy. So if you have faith in their estimations for December 2025 at 47 cents, then the forward PE will come down significantly, but still very high, even at 129.7. Now, before we do jump into some of the metrics, just to take a look at a very high level, we also want to flag 2 things. Or firstly, the more concerning thing for some investors may be that the insider ownership, while at 13%, has seen a significant amount of insider selling, just under 2 billion over the last 12 months, and notably over the last few days by the CEO. In fact, in Q4, 806 million worth of shares have been sold. And when we take a look at this, we can see Alex Karp on both the 13th and the 15th of November. And in fact, we can see again another tranche on the 7th of November has sold a significant number of shares, in fact more than 10 million worth, and this has netted him quite a substantial amount, in fact more than $600 million. Now remember one thing, on this channel we don't typically believe that insider selling is a bearish signal. Insiders in fact sell for many reasons, personal or financial, but definitely something we do want to highlight, as that is quite a large amount. It is from the CEO, and maybe something you perhaps want to include in your own investment thesis. Now we do a very similar analysis, but based on institutional ownership, around 46%, 1 billion worth of sales over the last year, but during the same time frame, pretty much 5 times as much buying. And we do notice then institutions are very bullish, and we can see such a massive buy in comparison to selling in Q3. So yes, lots of insider selling, especially by the CEO. The opposite on the institutional side, they are buying a significant number of shares. But regardless, institutions, insiders, or anyone else, you should always do your own due diligence and never copy and blindly follow anyone. We also note from their latest investor presentation, yes, the company does trade at a very high valuation, but we are seeing growth. In fact, from the same quarter in 2023, up 27%. For those that have seen previous episodes, their US commercial revenue and government revenue has also gone up a very attractive rate. We also like the fact that their income is going up year on year. Not just that, but their operating margin, 25% from the same quarter last year, 37% in 2024. And remember, on this channel, we want to see increase to the revenue, increase to the margins, seeing that operating efficiency on a year-on-year basis. Even better that we can note it here. We also note they continue on a quarter-by-quarter basis to close a significant number of deals. Just in Q2, 96 at least 1 million, and we can see 27 of those 96 were for at least $10 million. So the growth is there. It's just whether or not that valuation is just one step too high, and in our opinion, yes, it is. Then we get to take a look at their cash, 4 billion, looking very strong, no debt in fact, so a great balance sheet, as we will come to show you. But also their cash from operations are increasing, their adjusted free cash flows are increasing, all pointing towards the sign of a very healthy and profitable business. And finally, the main reason why we wanted to show you their forward guidance, in fact for the next quarter and for FY24, is because when we come to do our own valuation based on the DCF, we will use the middle of the 800 to 1 billion target that they are estimating for FY24 at around 900 million. Regardless though, growth is looking very good based on their prediction. So let's go back essentially to these metrics that we did want to run through. First one is the free cash flow per share. Nice to see it has increased, in fact, from the negative in 2020, and over the next full year from 23, it is expected to grow to around 44 cents per share. Free cash flow, as always, we want consistent increases moving in the right direction, something that very recently has started to apply to Palantir. Then we get to their sales growth, double digit every single year, although we do note a slowdown from 2020. On a trailing 12 month at 25%, it looks like the top line is going to kickstart going back up. And again, this would be anticipated by investors or potential investors purely based on this valuation that we are seeing attributed and through the numbers they have released in their latest quarter. And then from a numerical perspective, we can see that growth, 600 million on their top line to 2.23 billion in 2023. There's something we do need to make you aware of, whether or not it is of importance to you, is that they have been diluting your position as a shareholder from 2018, something they continue to do in 2024. As we can see on the trailing 12 month, it has increased. Now, typically this part of the analysis, we ideally want to see companies doing share buybacks, returning excess cash to investor pockets. Now, ROIC, typically 10% or more, give us faith management are able to effectively allocate their capital. This shows us, given it is negative, that they haven't turned a profit for quite a number of years. 3% in 2023 is fairly poor, but good to see the increase to 8% on a trailing 12 month, meaning we are hoping 2024 and beyond we get that 10% at the bare minimum. And then we can see what we just reflected based on the ROIC, negative margin, net loss for the majority of the period. Nice to see on a trailing 12 month at 14%. Does give us faith that they will be able to start moving this higher towards that minimum 16% level that we do want to see. Free cash flow, no complaints over the last 3 years. 40% on a trailing 12 month, looking very, very good. Minimum 5% is what we want, and they've managed to do that. And we do expect moving forwards, we will see some very high and attractive numbers from Palantir. Now, net debt to EBITDA, reflecting the earnings before interest, tax, depreciation, amortization. These are the number of years it would take the company to pay off all of their debt net of cash on hand. And what we notice, bear in mind, this correlates to balance sheet strength. From 2020 and over the next 12 months and on a trailing 12 month, it won't even take Palantir 1 day to pay off all of their debt net of cash on hand. So very strong balance sheet, definitely looking very good. And we already saw just in their investor presentation, as they said, 4 billion in cash with no debt. And again, we will come to show you that shortly. We also want to let you know we have released our latest free weekly article. We drop one every single Monday morning to your inbox, where we look at severely undervalued stocks as well as what's gone in the market over the last few days. So click below and you can sign up and read straight away. You'll also be able to gain access to 40 undervalued stocks for the month of November. Lots of information for each one, the upside that Wall Street themselves see over the next year. And on top of that, you can grab a spreadsheet of 22 undervalued dividend stocks that Wall Street believe have the most upside in the whole S&P 500 right now. So click below, sign up, and you can start reading straight away. Now, we've already discussed their top line revenue, which looked very good over the longer term, growing at a double-digit rate. But we want to flag the bottom line net income. Does it follow a similar pattern? And as we can see and already covered, it was a net loss for a significant number of years. In fact, just in 2023, they did turn into a net profit, 210 million. Nice to report on the trailing 12 month at 478. We do believe 2024 will not just be a profitable year, but significantly better than 2023. So that is a good sign. And then when we compare the essential cash versus total debt for the health check, we've already said very strong, but just to clarify here, cash over the longer term has been increasing, going from 1.1 billion in 2018 to 4.6 in the latest quarter. And as always, one number here in isolation won't tell us anything, which is why we compare it to their total debt numerically and directionally. As we can see, it has been decreasing. That is a high quality company trait where they do delever their balance sheet, not something we see that often on this channel. Zero debt in 2018, 255 million in the latest quarter, and their cash was far superior. As we've already said, won't even take Palantir 1 day to pay off all of their debt net of cash on hand. Now we get to the gradings, the first one being valuation at NEF. That will take no one by surprise. In fact, 162 on this metric, the sector median at 24.28, indicating to us right now, if you're buying Palantir today, you are paying a 566% premium. Now, whether or not you believe, firstly, it deserves a premium, and secondly, how much, something to consider, but we can say no matter what valuation metric you use, Palantir does look extremely expensive. Then we move on to the growth grade, where they get an A+. In terms of revenue year on year, 24.5%, a lot better than the sector median at 4%. Forward looking, 22, again better than the sector at 5.6%. And when we take a look at the earnings per share over the next 5 years, anticipated 26% year on year versus the sector of 15.2%. So growth does look better. You can argue, yes, it does deserve a premium. How much? Again, we will cover that shortly. In terms of profitability, also showing that it deserves a premium. 81%, better than the sector at 50 by a massive margin. Bottom line, 18%, again significantly better than the 3.44. And then we look at their cash from operations, just under 1 billion over the last 12 months, significantly better than the 92 million of the sector median. So a quick recap, we have a triple hold, Seeking Alpha, Wall Street and Quant, an F on valuation, an A+ on growth, with an A on profitability. So two more things before we get into our valuation. First one, comparing against companies in a similar sector and same size. Over the last year, Palantir up 184%. Over the last 3 years, Palantir up 183%, again one of the best performing. And over the last 5 years, we can see very strong performance, the best in the class. Question is, can they continue that very strong outperformance or not? No one knows the future, as past performance doesn't reflect that. But as always, you do need to have some level of conviction. Otherwise, you might be better off investing in the S&P. And over the last year, we can see massive outperformance. Palantir 187 versus the S&P's 30. Over the last 3 years, again, outperformance. And over the last 5, a similar conclusion. So lots of things that we have flagged. Now we can jump into the valuation model. And as always, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now our intrinsic value of $41 is from the DCF model. And when we take a look, we have the free cash flow year on year. Average growth rate, it is negative, as we can see free cash flow going from negative to positive a few years. So with the 30% is what we have gone today, with a low, medium and high. And the discount rate, remember we've used 900 as their expectation moving forwards for 2024. We then get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, giving us intrinsically a value of $41, which would give us downside of negative 31%. Now remember, these numbers are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your numbers, whether it's for Palantir or any others. But for full transparency, we'll just show you at the 25% rate, $31, indicating downside of 47%. That's nearly half the current price. At 35%, we can see here, for those that are more optimistic, $54, again, downside of 9%. So no matter which growth rate you use between 25 to 30, it does show that currently, based on Palantir's $59 price, this company is overvalued. Now at the 30% in the median, we will take it through essentially to the final calculation. And what we can see, we always like to use a margin of safety on companies we buy, and we execute on that if they meet the 3 golden criteria. Wide moat, strong financial metrics, good forward-looking data. Now look, essentially we're saying if you want a 10% MOS, and this is based on a growth rate of 30% moving forwards to the free cash flows, you would need to wait for $37, for 5% around $39. But ultimately right now we are saying this company is trading at a significant premium. Again, for those that do want to see, at 10% a buy at 37 and at 20% at 33. But right now, no margin of safety. In fact, Wall Street believe the price over the next 12 months will be even lower at $34, and they see downside to Palantir at negative 42%. Also, we can see, for example, for those that believe this will ultimately one day be a $1 trillion cap company, that the price of Palantir will reach $442, and maybe you believe this is the long-term target, it will get there, and no matter what, you see this as a buy the dip opportunity. For us though, Palantir does look very richly valued, not one we're considering, but as always, give us your thoughts in the comments below. If you enjoyed today's episode, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Don't forget to sign up to the free weekly newsletter below and come and join us in the Patreon where we do cover our weekly buys and sells. As always, have a great day and we'll see you all on the next one.